We'll be getting started soon, guys. Thank you for being here.
Yeah, I've missed the last several of these. Been real busy. Haven't had a chance to do something at night for a while. So,
Oh, awesome. Awesome. Thank you for coming. Nice to
well,
see you,
not a
Jeff,
problem.
Heidi.
I like to come whenever I can. I just haven't been. So I'm gonna start coming a little more regular.
Awesome. Awesome. Thank you. Bibi, can you help me admit people in? I need to set some things up in the background, okay?
It makes sense.
Oh, I already did. I was talking to myself. So let's try that again. Can you guys hear me okay? From the fact that you were laughing at me, I'm gonna go with yes, you could. You heard
Of
that
course
last
we,
piece.
of course we can hear you.
Awesome, awesome. Welcome, guys. It is another Asset Management Monday. Uh, with uh, with me and my co-host Bibi. Where are you, Bibi? You can't be shy. Hold on, let me find you. Hold on. Oh, there you are. You're muted. But alrighty. All right, let me admit some more people in and we're gonna start. I felt bad the last time because we ran out of time and we had to kind of rush at the end, and I don't want that to happen. Looking good, Bibi. What's going on? What is going on here? That's nice. Um, I saw Dan this weekend. For those who don't know, Dan and I were kicking it, working the room in New York. I think I saw Donna, but I'm not sure I can't, my screen is so funky. But anyway, welcome, guys. Thank you to Asset Management Mondays with Bibi and I. This is there anyone that doesn't know who MFC is? This is your first time. You're like, what? How did I even get this link? I just came to peek and see what this is all about. Put a one in the chat. We don't bite. We are super friendly, and we love to have you in here. The Multifamily Freedom Chasers are a group of 4 young men who decided that they were going to not only share the knowledge that they had received through a multifamily mentorship, but activate, 9-to-5ers, people like me and a lot of you in this room, towards their goal of achieving financial freedom through multifamily apartment investing. And so on Sundays, from Sundays through Wednesdays, every once in a while on Thursdays, we do have programming. It's almost always at 8 p.m. Eastern. And so Sundays are activation Zooms. Monday, we either do this with asset management or we have broker calls. Tuesdays, it's napkin underwriting. And then Wednesdays, we flip-flop between debt. We talk about the debt market with our debt broker, the Miles family. And we have a multifamily foundation series that are put out by the wonderful Armada Group. So let me go into the screen sharing. Okay. Let's go into our slides because I don't want to, here we go. I don't want us to run out of time today. So today's topic, and let me minimize you guys, sorry. But today's topic is, we're talking about key performance indicators for maximizing ROI in multifamily asset management. So again, with a focus on property management. Talked about myself. I'm a mom. Bibi's a mom. You can catch us over here on Instagram or through email. And all this is recorded just so that you know. And we do place it on the Multifamily Freedom Chasers YouTube channel. We also have a WhatsApp group. I will try and pull up the the QR code or the link to send that to you guys. Last week we talked about, we continued planning, right? The plan, rather. We talked about the property management's role in asset management and reforecasting, etc. Today is week 4. I know this alternates on an every other week basis, but today, this is week 4, and what we're talking about is monitor. So what are we monitoring? Traffic and KPIs. So if you remember from last week, we talked about we had already led up to how important property management is in asset management, in executing the business plan, etc. And we walked you guys through sample questions that you could ask if you were looking for a property management company. How do you know if one is if you're looking, what's a good property management company or good property manager? How do you actually manage your manager? Because that's asset management, right? Executing the business plan through managing the manager. And then when is it time to say sayonara, goodbye? And we started going through a checklist of things that you and the property management should be working on before you close, around closing, and post-close. So for today, we're going to be creating, or the hope is by the end of this, you should be able to create a multifamily key performance indicator plan, so a KPI plan. Look at a profit and loss statement or report and understand it, be able to review it, and identify how to maximize ROI through key performance indicators. Okay. What gets measured gets managed. That's a saying by Peter Drucker. And I think that's really key and prime in what we're going to be talking about. I guess the point is, you don't want to just put a property under contract and then start operating it and just leave it there, right? There has to be something that's measured, so you're not flying blindly. And those are the things we're going to talk about today. Bibi, do you have anything to say leading up into this, or do you want me to just throw up the next slide?
Yes, I have some things to say leading up to this.
Okay.
One of the reasons why we are discussing this aspect of asset management is because of mainly is because of the way the economy is right now. If we can take back, reflect back in 2020, 2021, most operators were not doing so much. In short, everyone was a good operator. Every single person was operating well because we were able to increase rent. People were increasing rent on the go. People were able to also, expenses was not this high. people were able to, cap rate was shrinking, and so people were able to sell their properties very, very high. But come back to 2022 from March, you see that the interest rates started increasing, and in that way, there's now a need for more concentration in operations. How do I mean? Right now, there's no free food out there. We are seeing rent incomes flat, no more going up as we used to see it. I remember in December, we put a property under contract, a 97 unit, and come February, the rent became flat. The good thing was that we're in our due diligence period, so that helped. That helped us. We were able to back up from it, So because of that, setting our KPIs or working very closely with our property management company has become very key. Operations now can right now, looking at the environment, can be the only key for us to maximize our ROI, our return on investment to our investors. So you can, can you go to the next slide?
Alrighty, sure. Hold on 1 second. Sorry, I lost my Zoom for half a second there. And okay. There we go.
Okay. So saying that operations is now very key. And in order for us to manage our operations, we need to measure it. It's not just for us to have them, but to measure them. Today, I'm going to talk about 3 tips for maximizing your ROI, but I'm going to concentrate mainly on KPI. I'm going to rush on the other 2 and focus more on KPIs. Last week, we discussed about property management company who are very key to our success in achieving our goals. And from what you can see on my screen, say recall that the property manager's major focus should be managing the tenants and the property to maximize investors' returns. So we're able to establish that last week that property management is very key to achieving our success. So now the first tip for us to increase our ROI is the customer. Who are the customers? The customers are the tenants. Most times we keep forgetting about our current tenants, and we focus more on the new ones or the prospects, and we don't even try to give a lot of focus on the current. And there's a saying, they say bird in hand is better than many in the bush. Because if you lose your current tenant, you keep going around the circle, and that will always affect your returns. So for my focus one is my customers. They are the most important aspect in this business. For the current things I take a look at is the renewals, enforcement, maintenance, and response. And what does that mean? My renewals, like today during our PM meeting, we're discussing about tenant renewals, and we're strategizing on different ways we should go about it and all that. Renewal is a very important aspect. Enforcement, are you enforcing your lease? Maintenance and response. Like I said, I'm not going to dive deep into this. I'm just going to flip through it. The other aspect is new. What are the things we should be doing to improve our new tenants? And what's the screening process like? What are the paperwork like? Are they in compliance with the city? Are they in compliance with the county? Then the feel of the environment. Something happened to us. We just closed on a property, and we've not even done anything. And somebody drove by and was ready to rent from us, but somehow the trash was just messed up. There was trash everywhere, and the guy said, "I'm done. I can't." And so we lost a tenant based on the feel of the environment. So for prospects, what are the things we should be doing? How do we get them? From drive-bys, online, ILS, that's the internet, from the internet, and referrals as well. The next focus is cash flow. rent income, other income, and vacancy. That is a very important focus for us to increase our return on investment. The rent income is the regular rents that we know of. The other income are things that you are like a value add, the things you are trying to impute to increase the income of the property. It can be covered parking, it can be reserved parking, it can be rent loss, it can be anything that will improve pet fees, anything that can improve your property to increase your cash flow, and vacancies and all that. Now, to the most important aspect why we are here today is the KPI. The KPI is very key. Ify, the next slide, please. Like we said, I told you guys from the beginning that we will not be discussing things we've not done. We'll be discussing based on experience and based on current deals and all that, in order for us to, one of the things we want to do is to be transparent and to tell you that these things do happen and how we're able to mitigate those kind of things. So today we'll be using a case study of one of our properties, 120 units. It's an hybrid, it's both traditional and student housing. The business plan for us on this deal, please listen to me, I'm emphasizing more on some things and I'm going to discuss on them further. The business plan for this deal is to make this property stable and reposition it. That means hybrid conversion. Now, what's our mission when we decided to take up this property is to enhance the quality of our property by improving, stabilizing, and ensuring long-term value for our investors. Take a note of this because we're going to break it down as we keep going. If you please, the next slide.
I just want to point out that value add is not the only business plan, right?
Yes, it's not the only business plan.
And you told them about the trash, Bibi. I know you said we're going to be transparent, but really? Okay.
Yes. And that was not for this property, guys. It's for all of our properties. And the thing is, these things do happen. It's one of our properties and we just closed on it. We had nothing had happened. Somebody drove by, he wanted to rent. These things do happen. So transparency is important. Yes, so what are the questions that a mission statement should ask? Before I say this, can you move to the next slide so that you understand why I am talking about a mission statement? The next one, please. We'll come back to this. The next. Okay. Yes, key performance indicators, how are they determined? Number one is for you to set your business goal. The business goal is like the vision. We all know what a vision is. Vision is like a pictorial view of what our goal should look like. But the thing is, most times we know our vision, but how to accomplish it now becomes the issue. That is when the mission comes. The mission is the catalyst to help you achieve, is the catalyst in helping you to achieve your vision. And for you to create your KPIs, you need to create clear missions upfront. How do I mean by clear missions upfront? If we go back to the slide where I was stating our mission for that property, if you please, sorry, you need to be multitasking. I will be going back and forth because I need to break this down. Yes. Remember here, I said our mission is to enhance the quality of our property by improving, the key word here is improving, stabilizing, and ensuring long-term value for our investors. When we are saying improving, that's value add on its own. Stabilizing, that means we want this property to be fully occupied. That means we're talking about occupancy. Ensuring long-term value for our investors. That means we want the returns to be very, very good. We are looking at a good returns for our investors in a long time. So your mission needs to be very clear. Like this is clear. We already know what we are supposed to do here. So the next slide. So what questions should what are the mission questions that we need to ask? I'm saying this before we dive deep because we're going to analyze some of our KPIs together. Mission statement questions that we should be asking ourselves is, what are your desired outcomes? Why do you want it? Who will be responsible? How do you review this outcome? How do you know you have achieved your outcome? How can you measure progress against this outcome? And when will you review your progress? So if I'm to answer this, what are your desired outcomes? My desired outcome is to increase the returns for my investors. How do you want it? I want to stabilize this property to be able to achieve, I want to stabilize property to achieve increased income. Who will be responsible? The asset management, the team on ground, and the property management company. How do you review this outcome? I will be reviewing it weekly and monthly, quarterly, and yearly. How do you know you have achieved your outcome? That is the KPI I'm setting. Those things are the metrics I'm going to use to determine if I've been able to achieve my business plan. How can you measure progress against this outcome? When I'm doing my actual versus budget, I'm saying if I'm on track with my actual projections. If my actual budget, if my budget is at 10 and my actual is at 8, then there's a difference between it. There's two between it. That means it's telling you that there's something off, something is going wrong. When will you review your progress? I can decide to review it weekly, monthly, quarterly, and yearly. So these are questions that your mission statement should answer when you are creating one. The next slide, please. Yes. The thing about this, the key performance indicators is we all know the value of KPIs. Every one of us here understands, and we've heard about KPIs. In short, we've created them in different aspects in our field. We've created them, but at times there's a disconnect between the asset and property manager on how they are built into the execution process that is integrating into everything you are doing. Now, the question here is not how or whether you have a KPI or not. The problem now becomes a disconnect. And I'll give you an example to that. We had a situation where we had the property management company, we had the on-site team, and we have the asset management team. Now, for the property management company, the on-site team, and we, the asset management team, there was a disconnect. The on-site team understood our KPIs, they understood our mission, but the off-site team, which is a property management company, did not understand. And let me tell you how that translated in real life. At the beginning of the deal, we told them we wanted to increase our income, we wanted to increase our returns for our investors. And one of the ways was for us to increase our other income. And how were we going to do that? One of the ways was for us to add reserve parking. The team on ground understood that we needed to initiate reserve parking, get some money, and that will boost up our income. But the back-end office did not understand the KPI, did not understand why we were hitting at that. And what happened? The team on ground executed our KPI by increasing our reserve parking. And at the point of execution of that reserve parking, the back-end office, which is a property management company, was not even aware of what was going on. And that caused a lot of conflicts because there was no form of organization. The back-end office was supposed to communicate to the property, to the tenants, that we're introducing tenants, we're introducing reserve parking, and we're going to start it up in so time. It's going to be on first come, first serve basis, and this is the amount. You have 60 days to tell us if you want to be a part of it. You know, create that kind of, you're introducing something that's going to increase, make them pay more money to you. So you need to handle it with care. But the back-end office didn't do that because, one, they didn't understand our vision. They didn't understand our KPI. Only the team on ground understood it. And they were not able to execute it because the back-end office did not inform the tenants, because that was their job to do. They did not inform the tenants, and they messed up the whole thing. And that thing, we received a backlash for 2 weeks. In short, we go back to views.
It was something that was the execution was heavily dependent on thorough communication, and that there was complete communication breakdown. Complete.
Yes. Yeah. So the idea, the issue is not about the KPIs. is the execution and the communication and how it affects every aspect of the key people involved in it. Most times we are seeing KPIs just being introduced by the asset management company. Most times only the asset management companies that knows the KPI, because one, they're the ones that informed the investors about the returns. They're the ones that have everything at stake. They're the ones that know what they actually want to achieve on a deal. But at the point where it's not properly communicated to the people on ground or to the management company, then that becomes an issue on its own. So creating a KPI is not enough. Communicating it and ensuring that the execution goes around everybody involved in the entire process is very important.
Can I see if this other example that happened today fits into this? It may or may not, right? So in terms of increasing occupancy or at least maintaining stabilization that we already have on another asset, the property manager, who has, in my opinion, the heart of an investor, wanted us to start, what was it called, like resident retention events, right? And your question was, well, how is this going to be funded? You were in agreement with it, but you just wanted to know where the money was going to come from. But I think initially what she was hearing was, you don't want this.
Yes. So there was a miscommunication there. The idea, if she understood our KPIs, the KPIs was for us to increase our income. That was very, very basic. And any way to increase it was a yes for us. But now we're trying to increase our income at a detriment of increasing our expenses. That is a no-no. So my question to her was, okay, you're increasing our income, I get it. How do we factor in the expenses that was not introduced into our budget? Where is this going to be funded from? So constantly we need to keep communicating our KPIs and ensuring that everybody in that organization or in that process understands it and all that. So please, the next slide.
Sure. Go.
Yes, so I just spoke about the next one. 3 ways KPIs can get the team focused is define key economy objectives. Like the question is, what are we tracking against? Are we tracking towards the income? Are we tracking towards the NOI? Are we tracking towards the expense ratio? Are we tracking towards vacancies? What are we tracking? I remember what I said last week. Not every property is unique. It's not all size fits all for KPIs. That is why you need to understand your vision or your goal or your business plan for that deal. There are different deals. You can have a deal that is not stable in terms of occupancy. You can have a deal that is 100% occupied, but it needs renovation. You can have a deal that is stable. It doesn't need, it doesn't need a renovation, but you just need to maintain what is currently going on. We've seen properties like that. Now, are we going to use a KPI that is for an unstable property for a property that is stable? I don't think that, that is not correct. You need to be tracking towards the mission. You need to set KPIs that will track your mission. What you intend to achieve, you need to set KPIs towards that. And how does it, the next one is create KPIs that track both weekly and monthly performance to budget. There are some things that you cannot allow go for the next 1 month, because if you do, it will cause an issue for you monthly. And there are some things you need to track monthly, because if you don't track them monthly, it will cause an issue for you quarterly and annually. So there are different things you should be tracking at different times. Weekly, monthly, quarterly, yearly is important. And the things that to be tracked weekly, we're going to show you an example of some of the things where we are tracking on our current deal, based on this deal, not based on another deal, based on this deal. Although some of the things you track can be concurrent, because every deal you're looking towards occupancy. Every day you want your property to be filled up. Every day you want to reduce your expense. and all that. But there are some particular things, like this deal, the one we just showed you as a sample, is an A-class property that needs no renovation. So are we going to be tracking towards CapEx? No, because we are not doing anything for the next 3 years or next 4 years, or during the time of hold, we are not doing any form of CapEx. So there's really no need for us to be tracking CapEx at that point. Then the next most important thing to keep your team focused is share the KPI across every team level. That is from your GPs to your asset manager, to your on-site team, to your property manager, the back-end property management company. Everybody must speak the same language. And it should be done weekly. And that is why we have weekly calls with our property management company. Those calls are not there for us to be gisting or for us to be talking around the circle. Those calls are specific to address your KPI issues, to know if your KPI is measuring the metrics of which it was supposed to measure. The next slide, Ify.
I wanted to ask, I see Isabel's hand up, and we did have a question in the chat. Do you want to address it now, or do you want to wait till the end?
Briefly, just one question. One
Okay.
for
Let's do Isabel's.
Hi, thank you, Ify. Thank you, Bibi. I think Bibi just answered because I was curious how they missed the how was that disconnect. I was going to ask if you guys had the weekly meetings, and
yeah, I
I
think
was curious to
Yeah.
see how you turn that around, you know, if you're able to catch in time, all that.
Yes, we were able. The good thing was that we were able to catch it on time. We caught it in September. I mean, in August, we knew about this because the property management. Last week we spoke about property management, and we're talking about the corporate office and the on-site team. Sometimes they are not in sync with each other. Sometimes we've seen cases where on-site team do their own thing, and the back-end office, they are doing their own thing. At a point, I got to ask them a question: do you guys do weekly meetings with your property management company? And there was no response to that. One. Then secondly, another question is, we've asked you guys to involve your property management company in our meetings. You don't do that. And the reason we got to find out was that they did not want things to be spilled out, because most times you can get the truth from the guys on ground. They're the ones feeling it. They will tell you the truth. But the back-end office, most times they know how to modify it to make it look so pretty. And you might not even know that there are issues going on. So those are things we see. So to answer your question, Isabella, there was a disconnect based on structure from the property management company.
Yep.
The back end was not engaging with the on-site team.
On-site team.
So
Okay.
we were engaging on both ways. Asset management was engaging with the property management and also engaging with the on-site. But guess what? There's still a disconnect because we were not all in sync.
Mm-hmm.
And that's why we fired them, and that's why they're no more with us, because
oh wow, okay, thank you.
These people are not with us any longer. We have a new property management that's taking over. So the next slide. Thank you, Isabella.
Thank you.
There we go. Okay, next one. Here we go.
Okay, I stumbled on this book by Stephen Covey. And the part that got me interested was great operators define a clear mission upfront and work backwards to create a purpose-built KPIs to track and share progress across the level. Just like when I was talking about the vision is already the end goal. We all know our end goal. I know if I ask you people, ask you about your vision, some of you say you want to be this and that, and we already know. But now the question now becomes, one, how do we achieve it? That's one question. The second one is, how do we know we're even achieving it? What are the metrics that tells us we've gotten there? You know, like what Ify said at the beginning, what does not get measured does not get managed. How do you know? that you're achieving it. Irrespective of you've created your vision, everybody has a vision, clear, check. Mission, not everybody knows how to accomplish it. Now, even if you have mission, do you know the metrics that you should use to track it? And that is where something called SMART. I learned about SMART when I was in my first year in college, and this we're trying to they were talking about I've forgotten the exact thing we were talking about, but it had to do a lot with vision. And the acronym, I knew the acronym and I also know the definition. SMART means specific. That means your vision must be specific. It must be measurable. That's the KPI I'm talking about. It should not be vague and all that. Then it must be accurate. It must be realistic. Don't measure something that is not realistic, that you know cannot even happen. And must be timely. Do you want this thing achieved in the next 1 year? What is your performer for? Because we all have created performance for our underwriting, performer for year 1, year 2, year 3. If it's not timely, then there's a problem, because you might miss out on the delivery of your performer. So your mission needs to be SMART. Then after doing all that, then you cannot walk your way backwards. Like I said, we have the vision. The vision, let me use this bottled water. This is my vision, to create a bottled water like this. What's the mission? What do I need to do? Now, my mission is that I am going to buy a plastic-friendly stuff, create a manufacturing company, mold it to this shape. I'm going to get a purified water and create a cap that people can easily open, and I should be able to form my water. That's the mission. Now, how do I measure that I have been able to achieve this bottled water? How do I measure that I've created it, or my goal is being created? Now, how do I measure it? It's one, if this quality, I have a specification for the quality of this bottle. If it does not meet that specification, let's say I want it to be this thin and is this big, then I'm measuring it wrong. Number one, if it's supposed to be this thin and is this big, then the weight now becomes too heavy. And when you are creating a bottled water that is very heavy, not everybody will want to buy it. It's like you're carrying a gallon I can't imagine myself carrying a gallon and jogging with a gallon. It doesn't make sense. That means it's not meeting the vision of me creating a bottled water, handy bottled water for my investors, for my customers. So I need to track the weight of this bottled water. I need to track if this lid cannot get slacked easily. That means the quality control of it. I need to track those things that is involved. I need to track the taste, if the water meets the specification of the quality that I want it to meet. Those are things that will now tell me that if I've succeeded in making the kind of bottled water I wanted it to make. So if you are transcribing that into property management company, we all want to give our investors 7%, 12% average cash on cash, IRR of even 28%. We've promised them heaven and earth. Now the question is, how do you know you are going to achieve that? When do you know you've achieved even the 7%? There are measures you need to start taking from today to ensure that you are measuring those things. So, like I said, define your mission and use the KPIs to keep everyone in the loop in terms of if you are hitting your metrics. I think the next slide is for us to discuss in details.
So we can't wait till the end when it's time to exit to realize, well, folks, we didn't make any money.
We didn't make any money. So so the next slide is the frequency. What are the things you should be tracking on a weekly basis? What are the things you should be tracking on a monthly basis? And what are the things you should be tracking on quarterly and yearly basis? I'm not going to talk about quarterly and yearly basis, because if you failed in your weekly basis, you failed in your monthly basis, then there's a high chance that your yearly accountability or your yearly metrics will fail, because these are the things that trickles into your quarterly and your yearly results. So my weekly frequency is, what I'm tracking in my weekly frequency is my occupancy and trends. I'm going to explain why. Like for my occupancy, if you see what is on my screen, I have something called a unit analysis. And what is this showing me? It's showing me the different kinds of units I have in place in my property and telling me which one is performing well and which is not. So on my weekly, on my weekly meetings, I'm tracking this to see which of them did I have high traffic for, which of them did I have low traffic for, what should I do? Like from what you can see that we are having issues with the 4-bedroom, 2-bath with the loft student housing. We are also having issues with, the exposure, yes. We are having issue with the 4-bed one I just mentioned. And we're also having issues with the last one, which is the 4-bedroom, 2-bedroom with office residential housing. This tells us that if we're measuring on a weekly basis and we're getting to see this, quickly, this alerts us and tells us what should we be doing to correct this. Let me tell you what we did to correct the last one, the last two. What we did was to find out from the leasing officer, what is going on? Why are we not turning over or converting more people? We can see the traffic coming in, but the conversion rate is low. And this chart alone was able to tell us that. Now, the response was that some of them are not qualified. They do not meet our standard. Check. The next question was that some of them would have rented if we go like $100 lower than they will rent. So we sat down as a team and said, okay, now this is the overall report that we're getting. How do we correct this? And the plan was, since our mission is to fill up this property, let's reduce our rent by $100. It's going to cost us something, but at least we're going to fill up that place in no time. That place will be quickly occupied or filled up because we've reduced our rent. Because from the research, that was the problem, right? So we decided to reduce our rent. And imagine if we're not tracking this weekly, or we decided to track it after 1 year. Then how do you improve your income? You just find out that your place is still the same. It's not improving in terms of occupancy. This is one of the reasons why. And things you should be tracking under your occupancy and trends is the conversion rate. How many traffic are you enticing? So now, is it an issue of the property not performing well? Or is it the property manager that is not presenting it well? Because we have some property managers that cannot sell. We've seen them, they cannot even sell. So now it's not the issue of the property. Now it now becomes the issue of the property manager or the leasing officer, whoever that is. Or is it that we need to review the cost? Weekly monitoring will tell you all that, and you'll be able to now review that and adjust as needed. And in that way, you've not waited till 1 month to see that problem before you start tracing it back. Now becomes an issue. So doing this on a monthly basis, you'll be able to track you should be tracking your conversion rate. Like, how many people came in, how many did I convert to become tenants? So if you are having 100 people coming in and you're converting only 5% and there's trouble, you should know that will give you a sign that I'm losing 95 people. What is the problem? And that was a problem with this property. We saw a lot of people coming. So the issue was not the property. Now the question was, what was the issue? The issue was not the presentation, because we also had to do a random check, because some of us called the property management company. And what did we do? We wanted to see their response time, wanted to see how professional they were. So from that exercise, we already knew that the property manager, the leasing officer was not the issue. the moment, what we saw from that exercise was that the moment you log into the website to do the application, it alerts them. And the next thing they are doing is they're calling you. So the issue was not the property manager. So now the next issue that we're able to track was the amount. And because we understood that, we're able to address it and we've reviewed it and things is going on well. So that is why this weekly is important. And the next thing we are tracking, I just mentioned it now, is the review the traffic. Are you having traffic or you're not having traffic? If you're not having traffic, then it might be an issue of the online. The marketing materials you're using. Do you need to spend more on marketing? Do you need to address a particular aspect of marketing? What do you need to do? When you are tracking your traffic, you'll be able to answer that question and you'll be able to create a plan towards that. Then PM weekly KPI review. This is something that you and your property management company should be doing on a weekly basis. You need to be going through your KPIs. Whatever it is you've set out as your KPIs, you guys need to be doing it. The monthly financial reviews and operating metrics. So now let's go to the practical. What exactly are we measuring in one of our properties?
Yeah, no, I just wanted to point out when you were talking about traffic, that the way a class A is marketed, right, might be completely different from the way class C might be marketed. Because remember, there's an asset that we have. If we inject a lot of money in online marketing, apartments.com, we're wasting our time.
It's not time.
We're wasting our time and our money. So knowing your
let me emphasize a little on that. Like because we're tracking our traffic, we knew that in the process of tracking it, there's something they call boss call. Boss call. What boss call tells you is the source. It tells you the source, the frequency. It gives you a lot of story about your traffic, what is going on, and the unit. Which of the units is giving you issues in terms of attracting people? You get to see everything in the boss call. So in that boss call, we noticed that I've forgotten my train of thought, but there's something called boss call. What it does is, somebody is asking, is it in the software program? Yes, it's part of the report you get from the software web program. So that boss call was telling us that most of our traffic was gotten from drive-by. So imagine us now spending money in apartment.com. One, you're losing money. Two, it's not making any sense.
Yeah.
So what did we decide to do? We decided to start now taking care of our curb appeal, making sure our front is looking good, doing the parking lot in front, trimming the flowers, trimming the trees, because now we know that since our property is on the highway, people are driving by and they are coming in even without any advert. So that will direct you on what to track, or when what you're tracking is not what you're supposed to be tracking. It will tell you. So please share. So we're going to share with you a sample of our what we are tracking on one of our properties. So it's not, like I said, it's not all size fit, or not because everybody's using apartment.com or using whatever, Facebook, Zillow. It does not mean that you should use them. You should find out from your boss call what is the source of where people are coming from, because your boss call will show that to you. Which will show you if they're coming from Google Ad, if they're coming from ILS, from the internet, if they're coming from drive-by or referral, you will see all that. And in that way, once you're able to see all that, you'll be able to pay more attention to what is giving you value. And in that way, you're not losing money as well, because you're advertising for the whole world. One very funny thing was, one of our properties, the advertisement and marketing was about 100,000. And we checked their boss call and we found out that most of their sources was coming from their website and also from Google Ad. So my question to them was that, what is the value of your 100,000? You are paying for apartment.com, you're paying for this, paying for that, but where are the students? I mean, where are the people coming from there? No, nobody. So why are you spending 100,000? Because you're not tracking your bus call, things coming out from your bus call. So this is a sample of one of our key performance indicators, things we are tracking on a weekly basis. So we go through this with our property management company and we review, and based on this, we'll be able to know if there's a problem. The first thing is physical vacancies. So I'm going to rush through this. We are not just tracking just the current occupancy. We are tracking the current occupancy for the next 30 days, 60 days, and 90 days. And why are we doing that? The reason why we are tracking for the 30 days, 60 days, and 90 days is because we want to know if in the next 90 days we'll have very high vacancy, or if we have a lot of renewals and we were not sure that they will be there. That will affect our income. Remember, our mission is to give our investors good returns. I'm paraphrasing, that's not exactly the word, but the meaning is that we are promising them long-lasting returns. And if we are not tracking our occupancy for 30, 60, 90 days, imagine if our vacancy in the next 90 days is, let's say, 20% vacant. And right now we are 5% vacant. If we're not measuring that, then when we get to our 90 days, that becomes an issue because we were not tracking it. So you're not just supposed to be tracking your 30 days. You're supposed to be tracking 30, 60, 90. In short, the whole year. Like we use resume for some of our properties. You get to see the 60, 90, you see the trends, you know what's your occupancy in the next so many months. You get to see it from there and all that. So those are things we track, not just the current, we track future. Current lease signed. This is important. You want to know how many people are renewing. Because if there are no renewals, then you're in trouble. Your income now becomes, all these things are like it's like a ripple effect on your, it's like it becomes a ripple effect on your overall goal. Because if you are not having your current people renew their leases, then there's a problem. Your income is going to go low. That means they're leaving. So you want to track how many they are and provide solution towards that. Then scheduled move in and scheduled move out. You need to know in the next 30 days, how many move in are you having? How many pre-lease are you having? How many properties are ready? Vacant, rented, ready. Vacant, rented, on rented, ready. You need to know, you need to be tracking that. The reason why you're tracking that is to know, okay, what if you have a tenant that wants to move in? Do you have any available place for them? Do you? So these are things you need to be checking. Another important thing that we're also tracking is trending occupancy. We were monitoring the trends. And while we're doing that, we want to know how the trend is moving. Is the trend moving towards high vacancy, or is it moving towards low vacancies? So trending occupancy is another aspect. So it's not just, I want to just track my what do you call it? My occupancy. And the next one is renewal outlook. In the next 30 days, how many vacant, because when we're talking about renewal, we're talking about expiry. Meaning that in the next 30 days, some set of people, their lease is ready to expire. And if you're not tracking it, then how do you now know who is leaving and plan for a renewal? How do you know which of those units are leaving? And okay, then that means I need to increase my advertisement, or I need to do something else to be able to ensure, or do a program like what Ify was saying, the retainer, because one thing we're trying to do in one of our property is renewal retention party. It's because we are seeing that in the next 30, 60, 90 days, the occupancy is going to go up. I mean, the vacancy is going to go up if we do not do this. So all these things, like I said, has a ripple effect on your overall income. The next one is tracking eviction. How many evictions do you have? We are tracking evictions. How many people are paying? One of the things that is killing properties is not just your income, it's the delinquencies. How many people are paying? Because there's economic vacancy, there's physical vacancy. That means the actual cash, how much is it compared to what it's supposed to be? So if you are billing people for 180,000 and you're getting 90,000, that means you've lost 90%. Are you tracking that? So how many filed evictions do you have or judgment granted? These are things you should be tracking. Especially when you are tracking your delinquencies, you will know how many people should not be on your property in the first instance. They are not paying. What are they doing there? Economic occupancy, I just said that now. Average revenue per unit. Budget variance, very important. Total vacant, delinquency, make ready, and can you go on? Marketing. This is a very important aspect for us. Like I said, it's not all size fits or KPIs that we're doing. For this particular property, marketing is very important to us because our goal is to increase the stability of that property, to increase the occupancy. So marketing is something that we should be tracking heads on. Versus another property that our occupancy is 100. Marketing will not be the number one topmost KPI we should be looking at because we are already 100. In that case, what we should be looking at is tenant retention. We should be looking at our renewals. We should be looking at our evictions in that case. But for this one, I'm looking at my marketing. I'm looking at my occupancy. I'm looking at my my economic vacancy. I'm looking at my make ready. If I have high vacancies and my units are not ready, then that becomes a problem. So how many units are ready to take up the kind of inflow of tenants that I'm looking for? These are things we should be tracking. Some of us don't even do this, our weekly review. Let me give you an example of what we did here. Recently, we started tracking our Google review on our properties. We are doing this intentionally because we notice some people don't even come to your property. All they go to is Google and they go to read reviews. And that alone you can lose tenants just from that. So we now realize that this is an important metric that we need to be checking. So recently we've been checking it every day. And once we see a bad review, we just go there and counter it, We just go there and say the right thing. So we need to be reviewing this and also be encouraging our tenants, because if your review is on like 1%, 2%, you might need to start implementing some strategy by telling your tenants to write something good about the property, what they're enjoying. Go there and write reviews for you. But if you're not tracking it, then that becomes a problem. Now that we are even in the internet age, that people don't need to come to your property, they just need to go online and check you out, and that's it. So this is a summary of, I wish I was able to break it down, but I don't have that time because we're also going to go through another one. This is a summary of the weekly things we track on a daily basis, on a weekly basis. And if we're able to do this on a weekly basis, it saves us some issues in our monthly reports. Let me show you how. Please, the next slide. Imagine that we've been tracking our occupancy and we've been able to address the issues, and between the first week and second week, we start seeing result, third week, we start seeing result. It will affect our results for our P&L. And how do I mean? Let me show you. For our P&L, we track our P&L on a monthly basis. No, can you go to the, Now, imagine if we were not tracking our occupancy. Our our total net rental income would have been a problem. How? If we're not tracking our delinquencies, let's assume that we noticed in the first week that 8 people have not paid, and that 8 people is a total of 8,000. If we're not tracking it, That means our property management manager might not even know and might not go to their doors to knock. Hey, pay me my rent. Because we're not tracking it. But because we're tracking it, she goes around the properties to those owing. You need to pay, or else I'm going to evict you, or you start paying late fee. And to a certain point, then I will evict you. Because she's tracking it. If we are not tracking our, what do you call it? Our other income. This our other income might not give us that benefit that we want. Remember, what we're saying is that we want to increase our, long-lasting value for our investors. If we don't have more money coming in through our other income, then how do we improve on our overall rental income? How? So it's because we are constantly checking on these things on a weekly basis, checking our occupancy, delinquencies, renewals. Imagine if we had, we didn't have people renew. Our vacancy might be even as high as, let's say, 30,000, because we're not monitoring our vacancy from day one on a weekly basis. But because we are monitoring it on a weekly basis, now the ripple effect on our property management, on our P&L is now positive. Is now below what is supposed to be, assuming we're not managing it. And so for our P&L, we are managing it, we are tracking it against our budget. Last week or last 2 weeks, I spoke about budget. Who prepares the budget? And when do you start executing your budget? I explained all that to us in our previous meetings. So our P&L, we always need to track it against the budget. Now, the budget and the pro forma, remember we have three things. The actual is what is currently happening. The budget is what you and your property management company have signed on. And your pro forma is what you did in your underwriting. Remember, before you seal off on your budget, you must track, you must ensure that it reconciles with your pro forma. Because your underwriting cannot be in the south and your budget in the west and your actual in the east. That is failure on day one. So first of all, your budget and your pro forma must be in line. And your actual is what exactly is happening, and you're tracking it against the budget. So if you see now on my line 13, you see that my actual for my gross potential income was right now it's at 154. My budget is supposed to be 149. So saying this, I already know that I am ahead of my budget. That means I have a plus. For my loss gain to loss lease, 10,000 versus 11,000, I have a plus. Now look at my delinquency. In my budget, I projected a 0 delinquency. My actual, I'm seeing 1905. If we were tracking this weekly, the probability that this will not exist will be high, and the probability that maybe we would have evicted this person or started the eviction process will be high. So in this way, we already know that we're delinquent on this. So how do we now ensure that this does not give us a long-term issue? Because remember, for delinquencies, we are tracking 30, 60, according to the, we're tracking it for the number of days or months. If you do not take care of this delinquency, it becomes an issue. That means it starts to affect your net rental income. The vacancy, we are tracking it against the budget. In our budget, we said that it was going to be 0. The vacancy now, actual, we are seeing it as 10,271. What is the meaning of this? It tells us that there's something wrong, maybe with our advertisement, our traffic, the conversion rate, or there's something wrong with our retention. This tells us a lot of things. And if we are managing this weekly, we can actually see why this is this. Because we're managing this or monitoring this weekly, we know why we have this vacancy. And the reason is because of the way we took over the property. We had high vacancy at takeover. So, and it was due to the seller. So because we understood that that was an issue from the seller, we're trying to bring down the vacancy, and we brought it down to something around 10,271. It tells us that either we are doing better or we need to improve more on it. So that is about our income and our other income. Our other income, what does this do? It also tells us, are there things we should be putting in here or be introducing to our property that will increase this? So for us, we've already been able to identify 5 more value adds we can add to increase or improve our rental income, because we are tracking our rental income. We know that what it is right now, we need more. So we've introduced 5 of them, and we are trying to ensure that those things now starts producing money. The next thing for us to do, because this is important when you are tracking your occupancy and your income, the next thing we're supposed to track is our expense. Please, the next. We have controllable expense and uncontrollable expense. Controllable expense are things that we can control, like our advertisement. We can decide to tone it down, reduce the amount we're spending based on whatever reason you have. We can decide to renegotiate our payroll with our property manager, or renegotiate our property management fee. Those things are controllable. But things that are not controllable are things like your property tax, things like your insurance. Those things, it is what it is. Although in quote, there are ways we can also deal with that. But for this purpose, they are seen as uncontrollable expenses. So if we are looking at this, we should be able, it will tell us something. And what will that tell us if we're looking at our uncontrollable expenses? Like the actual here, we are looking at the payroll. Please, can you take it up? I want to start from, okay. Let me start from, go down a little. Let me start from the payroll. Okay, good. So now from this payroll, we are seeing that our site office salary is higher than what we projected. And our site maintenance salary is 0. Now the question is, what happened? Why don't we have anything here? Because I saw a site person. Why is that person not here? Right? So this thing starts tracking it, because at the time of reconciliation, if this thing is not properly done, you get to start seeing, because we have, I told some of you, we have something called accrual and cash basis. Cash basis does not take cognizance of things that have not been paid for. Then the accrual basis are things that have been done. So if this is a cash basis, and let's say you've not paid the site maintenance, it might give you a wrong view of what you're saying. So now, the question I asked the property manager when I saw this P&L was that I saw a site manager. How come there's no money here? Because I saw him working. Because I'm tracking this on a monthly basis, I don't get slammed the next month for error that should have been averted. That's for that one. Then the next one is my plumbing supply, or my HVAC repairs, or I'm looking for, yes, total make ready. Yes, because part of my KPIs for my weekly has total make ready, and I'm tracking it on a weekly basis. You can see what is here. My total make ready here is 0, and my projected was 2250. Now the question is, did we have any make ready and it's not here in the actual? When I checked, there was no make ready. So it means that we've saved money. So this things, so our P&L kind of tells us where we are going off track. Because in doing it like that, we can be able to picture our actual versus our budget, and we are going to compare both together and know exactly where we are at every point in time. So if you scroll down and let them see the result of our actual and our, okay, look at it, our actual. Because we are tracking this, we are aware that our net income is good, better than what we projected it to be, our budget. So this is a pass. But for example, if this was the opposite, it means that our weekly reports must have been an issue. We're not tracking something. We're not tracking our occupancy. We're not tracking our work orders. We're not tracking our KPI. We're not tracking our renewals. So invariably, in summary to this, our weekly report is very important. If not, it's going to have an effect on our monthly report, and our monthly report will have an effect on our yearly report. So it's very important that we start out weekly, monthly, quarterly, in order for us not to have problems at the end of the year. Remember, we've promised our investors a lot of percentage, and this is the only way for us to track it as it's happening in order for it not to affect our returns. So most common KPIs I measure are the occupancy. I check my occupancy for the next 30, 60, 90 days. For example, the property we're using as a case study is a student housing. Because I'm aware that when it's May, June, July, the school goes on break, people go home. So what is my plan in the next, assuming I'm in May, February or March, what will now be my plan for the next 30, 60, 90 days? How do I ensure that my income is still not affected? What am I supposed to be doing? So we are tracking our occupancy on a go. Month-to-date income to budget. Why we are tracking this is because we want to know the income that is coming at every part of the days in a month. Like in week 1, how much did we collect? Week 2, how much did we collect? Week 3, how much did we collect? Week 4, how much did we collect? Compare it to the budget. Then delinquency. This is one thing that is killing deals now. You need to check the delinquency. I remember when I saw high delinquency, I was asking, why are we having delinquency? Why are we not knocking on the doors? Why are we not doing this? These are questions that if you're tracking weekly, you will see. Aging work order. Remember in my first slide, I was talking about customers as being the most important aspect of you getting your return on investment. Aging work order is how quick are you there to handle work orders? Imagine if your toilet is spoiled or damaged and your property management company did not come and fix it in the next 2 weeks. Would you want to keep remaining in that property? That means the response time is very bad. Nobody wants to stay in a place that they do not respond on time. So this is very key. It's one of our important, I look at this every week. How fast are they responding to the tenants that are paying for the rent and are helping us in our income? Because income is something I'm tracking, and this alone can affect my income. The next thing I'm checking is my operating expense to budget. How much am I spending against my budget? How much is it? So the next slide is a list of KPIs that, depending on your deal, you can choose to start tracking. Remember, it's not all size fits all. Don't come and take my template and say, yes, I want to use it to track we don't have the same problem. Our deals don't have the same issues. So create yours according to your business plan. So I'm going to go through it very fast. Common examples of some KPIs: occupancy, delinquencies, net operating income. Some people are tracking loss to lease. They want to know how fast they are getting towards the market. New leases signed, average time to track work orders, conversion rate. This was when I was talking about traffic. The issue is not you getting people the issue might not be you getting people to look at your property, but how many are you converting to tenants? You need to track it. And if you're tracking it and you now know the problem, you need to address it. This will help your income. Renewal and expiration. This is one very important thing that people need to be tracking. What is your renewal in the next 30, 60, 90 days? How is it going to affect your overall budget or your overall performance? Average time to turn units. This is also important because you're trying to manage or monitor the maintenance, the on-site workers, to know how soon will your property be vacant. Because if they are using 60 days to turn a unit, then that means you're not making money for 60 days. So these are things you need to be tracking. Like I gave you guys an example of what happened in the past, that one of our properties, they were taking an average of 4 months to turn one unit. So imagine you're not having income from a unit for 4 months, and imagine you have 5 of that. Calculate the dollar amount of that. That's a lot of money. So you need to track the average time to turn units. Average unit turn cost. How much are you spending to turn? Like some people, I've seen them putting properties under contract, and they tell you they want to spend 12,000 in an income. Now the question I ask them is, what is the return on that investment? It's not just for you to make the property beautiful. What is the return? How much rent can you increase that property to that is going to give you that returns? And when are you breaking even? When you start making profit on that investment? So this type of average unit turn cost, you can use this for value add. Those value add properties, very important, or units that you're turning over. Tenant turnover. This is a very important one. Like I said, tenants are the most important. They are one of the most important people that can determine if you get good returns. So you need to monitor how fast they are turning. Should you increase your advertisement, you would know. Should your property management company be more pleasant? What's going on? Why are people leaving your property? These are questions you should be asking. Why are people leaving my company? Imagine you having turnover of 10%, from 10% increases to 20, 30. That's an issue for you. You need to find out, what is the problem? Is it the increase in rent you just introduced? Is it the tenants? Is it the work order that they are not fixing on time? Operating expense to budget. It's not only important for you to increase your income. That is good. But your expense, if you're increasing your income and you're spending as much, then that becomes a bigger issue. Because I don't know what you're doing in that instance. So you need to be tracking your operating expense to budget. Then CapEx. This is important. Some people see that because it's under the line. Under the line, I mean that it's below the NOI. That it does not matter. This is very important because this alone affects your cash flow. Because after your income, you take out your expenses. After your expenses, if you have an asset management team, you pay them. After paying your asset management team, after paying your debt, you pay your asset management team. After the asset management team, your CapEx, right? The remaining one is your cash flow. Imagine if your NOI was fantastic, but you did not control your CapEx. Then it's zero. So it's important for you to track your capital expenses. Remember, you promised your investors an average cash. You promised them a cash on cash. And this CapEx alone is going to affect it if you don't control it. So there are many more. So you need to understand, know what your mission is, and ascertain what kind of KPIs will be involved. And not just that, ensure that everybody is in line with that KPI, not just you, everybody, your on-site, yourself, and the back-end office. Thank you all. Does anybody have any question?
There was a question when I think the P&L was up about what the admin fees were or what they represented.
Which one?
Admin
fees. We added it to our other income because we introduced it as a value add. Let me explain. We're doing some paperwork, like we are giving them invoices maybe for their utility bills and all that. Those things are expenses coming from us. So we are charging an admin fee to be responsible for that. And in that way, that is now converted to income, other income for us. So that is how we're able to use admin fee to get other income from our residents. I hope I answered that.
think so.
So for example, we are doing all bills paid for the utility, but we are incurring costs on the all bills for the utility. We are sending you invoices, there's a labor involved in it. There's somebody there that is doing all that. We are paying for the software to do that, processing fee and all that. We introduced the admin fee to benefit from that, and that is as added to our other income.
Oh yeah, so Stephen, do you want to unmute and tell us about your questions or ask your questions? I don't know if you already threw them in the chat, but I know he said he had questions at the end.
Okay.
Yes, thank you. So I actually had two, one in reference to the KPIs. So particularly if you're focused more on the leadership aspect and the overall vision of the company, are you the one that's arranging these weekly meetings to discuss KPIs? Or do you have somebody on your team that's doing it, with this part of it? And then the other portion of it is do you actually arrange that with your asset or your property management companies in advance, or how do you do it? And then I've got a second question in reference to Google reviews.
Now, hold on. I'm not good at answering so many questions. So the first one is, let me just answer that first one. Like I said from the beginning, is everybody must be in the loop of that KPI. So who sets the KPI? You've created your business plan. You already know what you want to achieve. You want to increase your rent. You want to do this, you want to do that. Those are the communication you would have communicated to your property manager in form of a business plan. You would have communicated your business plan to the property manager. So you guys are also going to sit down and say, okay, how do we track that we are progressing in these things that I've set out for you to do? Invariably, you're supposed to be having some consistent meetings with your property management company, even before you start up. And in that meeting, you are telling them your business plan and you guys are setting metrics together. And sometimes after doing it, you forget. But in that weekly meeting, what happens, what we see doing is some of them, I'm the one that creates it weekly, sometimes the property management, but the right thing to do is the property management company is supposed to get that report ready and review with you. And you are asking questions and seeing it. It's a lot of work. I do it, but it takes me 30 minutes or 1 hour to do. So I've decided to push it to my property management company to do it. Let them create a report based on what we agreed as the KPI. They're the ones doing the job. Tell me if I'm hitting my goals, then we both discuss it on our weekly meeting. So that weekly meeting is for us to discuss what you've done or issues you're having, and we can see it on that KPI. I don't know if I answered that question, Stephen Lowe.
You did, and yeah, you did. So second is Google reviews. So when you are going through Google reviews, what do you pay attention to? Because I know for us, we actually, I mean, though the 4s and the 5s are great, everybody wants those, but we pay more attention to 1s and 2s. And some of the things that I guess I would throw out there is like, one is how we respond to them. One of my pet peeves, and actually we just were reviewing this on a pretty sizable deal today, was we went through the Google reviews and they had as many 1s as they did 5s. We skipped the 5s, read the 1s, and the 1s told us the story that we were suspecting. The 5s were almost all fake.
Yeah, you're right. Yes, let me tell you, we checked the Google reviews, and if you look in between, sometimes is disgruntled tenant that just wants to mess you up. So you need to find out the tiny line between the truth and someone that just wants to go out there and mess you up. Okay, like this case that I was talking about the reserve parking. It was just a group of few people that were upset. And we had to dig deeper. We found out that they were troublemakers way from a long time. They are this kind of people that something they don't want, they go on Google and mess you up. So we understood that. Another thing we understood was that we noticed they were attacking the property manager. Now it's two things. Is the property manager doing her job? Because once she's doing her job, if she's enforcing the lease or doing what she's supposed to do, don't expect tenants to like her, really. because she's enforcing things she's supposed to do. You can't do this, you can't do that. Definitely there'll be resistance. So you need to know in between the line, is it that she's doing her job and they don't like it, or she's not doing her job and they're telling her she's not doing her job? So when we saw that, because we noticed our property management was the center of attack. So it took me to go down and some group of people, she didn't know we were just observing things going on. We found out that she's a workaholic. She just wanted to do her job at any cost. She doesn't care. And that was spoiling her reputation because she was enforcing. So what did we do? We started in a very subtle way countering those things. No, this is what it is, that in a very subtle way. So you just need to really look at your Google, what do you call it? Your Google reviews. You know what exactly is going on. By the time you go down a little, you know it's either somebody is just upset or people are upset. I've had people do it to me, especially in my Airbnb. They just want to mess you up for no reason. You know, so, but I get to challenge it and say, that is not the truth. You know, this is what happened. So you just need to know what exactly is going on. Sometimes it's really bad. You can know that a property management company is just, it's not good, just from the review.
Awesome. And we have Jeff. He has his hand raised. Stephen, you all set?
Yeah, I'm
You
here.
got it. Thank you.
Okay.
Appreciate it, B. Thank you.
My question is a couple of things too. I noticed that you didn't say anything about your competition, and knowing your area, knowing what you have, and scoping out the competition is going to be very vital to your success or lack thereof. If you don't know what your competitors are doing, that you're leaving a very important part of the recipe out of the mix. Okay, I've got more years than I care to mention in sales and sales management. And if the management of your property doesn't have a professional sales force, you will never get a conversion rate above wherever you're at now. You have to have qualified salespeople. You have to have 80% of all the money in the world is in the follow-up. And if the management isn't following up with each customer that they don't close that day, they need to find out why, and that management needs to find out why their people aren't following up. It's simple, easy things for me as a manager, because I've done this day in and day out for years for multiple companies. And having a good sales force is the key to having all your units rented. There's a lot of things. There's a lot of things you can. There's a lot of things you can do with the kids that come for 9 months a year. Okay. And you can put them on a 1-year lease. You know, give them a reduced rate, but you put them on a 1-year lease. And that way you don't have that big hiccup in the summertime. Just as a suggestion. I mean, I'm not the smartest cookie in the bag.
Jeff, sorry to interject. The reason why I'm interjecting was because we've addressed this when we're talking about the property management. What are their roles? What should they be doing? So if you go back to our replay, you see that was a major issue. You should have your property management doing monthly or quarterly, depending on whatever goal you set. To be checking out what your competitors are doing. That means combing your comparables. You know, they need to be checking that. So, but this, like I said, is not all size fits all for this, but those are duties for the property management to do. I remember I was talking about conversion, traffic, advertisements, and those things. Those things too, when you are doing all that, those are the actions that you should be taking. I will not be telling you actions. What I'm telling you is the KPIs. Those things are embodiment of so many activities, like traffic. Okay, what are my competitors doing to attract people to their listing? Is there, but the key word is traffic, right? What are you tracking it? In what ways? What are the things you are tracking, right? The other thing is my income. I should be tracking what my comparables are doing. So, but what I'm tracking is my income. So now you have to break it down and say, okay, I'm going to track my market. I'm going to track the trend. I'm going to track this. I'm going to track that and all that. It just depends on you, what your goal is at that point, or what is the need of that property at that point. For a property that is not stable, yes, you should be in depth into traffic. You should go really in depth into your income, your delinquencies. Those things really matter at that point. But for a property that is 100% occupied, what I should be looking at is my renewals, my tenant retention. Those are things I need to be focusing on. My CapEx if I'm doing rehab, my expenses ratio, my NOI. Those are things I should be tracking. So it all depends, but although some of them is universal to your deal, like your occupancy. Right. Everybody needs to fill up their property. Everybody needs to control their expenses. Everybody needs to check their NOI. Those things are uniform, but specifics like CapEx, this, that. If I have a property that does not need CapEx, for instance, why am I tracking it? I should be tracking other things that are important to that property. So that's why I said your mission, your vision is I started with that. It was intentional because my goal is not your goal. I know what I want for this property. I want it to be this and that and that. So I'm going to create KPIs to tell me if I'm even doing it at all, if I'm achieving that goal at all.
Okay. Well, I was just going to say the management is a key member of that team to get those things done.
Yeah, so please listen to our replay for last week. We addressed property management. Everything that you're talking about today was really addressed. In short, for hours, I was even tired. We addressed it in details in that webinar.
Sure, perfect. That's all I wanted to say. Just professional sales force, make sure that you have one, because if they don't have a professional sales staff, they won't be able to close so many things. So, and that's a key part of that management. And if they don't do it, you're going to have to maybe make some adjustments to make sure you can get those closings you need.
Yeah, thank you so much, Jeff. Any other question, Ify?
I don't think so. I think we are all set, and we are actually, right at time. So actually we're overtime. I'm being kind of nice about it. So next time, what to expect for next time is we're going to do a recap of week one all the way through week 4. And then, we'll open it up for Q&A because, towards the end, there's we're kind of rushing sometimes. So if anyone has any questions, I put the WhatsApp group link in the chat. Feel free to throw your if a question comes to mind, write it down. You can throw it in there. We'll address it at that time. And Jeff and every other person who hasn't watched the replays, it's on YouTube, Multifamily Freedom Chasers. It's free. It's it's right there. And I think that's all we have.
Yeah, thank you all for coming, and I hope we've been able to. If you did not go home with anything, always remember this. Always track weekly, track monthly, because this will have an overall effect on your annual or your yearly goals. So the earlier you correct it, or the earlier you notice what is going on and provide a solution, the better for everyone. So track. Somebody said in this thing, said track, very important. Thank you all for coming.
Thank you, guys. Awesome.
Ify.
Yeah?
Stop recording.
Okay, hold on one second. Let me hit that stop recording button.